time in the market, not timing the market. You may have heard me say this before, that it's important not to time the real estate market, but as opposed to getting in and waiting for the long run, which most to us in the long run make money in real estate. So why is it here at DDP over the last 14 years of running it, we have taken our clients to different markets when I've said we shouldn't be timing the market? I guess my response is clients use us as a service provider to find good areas that we believe are going to grow. My view over the last 30, 40 years of the Australian property market, in the last 30, 40 years, is that markets have gone up significantly in the long run. However, when a client uses our service, what we want to do is also give them, as much as possible, a short-term return. Not only a long-term return in real estate, but also a short-term equity gain. And in order to get a short-term equity gain, we need to study the markets. So if we look at the last 14 years of DDP, we initially started in Western Sydney and Southwestern Sydney. Property prices in those areas only 15 years ago, I'd say was approximately $250,000, when majority back then would steer away from those markets in Western Southwestern Sydney. Now, 15 years later, properties are probably 1 million minimum plus, nearly tripling in value. We got in at the right time and we got out at the right time when most were getting in to Western Southwestern Sydney. If we move on from Sydney, we look at Brisbane. In Brisbane, 10 years ago, the return on investment in Brisbane was virtually 0% or negative growth in most areas of Brisbane. So we moved on to the Brisbane market, where we were helping clients buy properties in Brisbane for around $280,000 to $350,000. And we got into the Brisbane market when most weren't looking into getting that market, and we got out of the Brisbane market when we started to see that it may be peaking. And now property prices in Brisbane for the areas we were buying for $250,000, $280,000, $350,000 are probably $750,000 upwards. Recently, we went into the Perth market. We got into the Perth market just post-COVID. And the Perth market, I'd say for the good 10 years, was also virtually 0% growth after the previous mining boom. So we got into the Perth market just before a boom, and since then our clients, in a period of 2-3 years have made it hundreds of thousands of dollars in equity. And then when we saw that the Perth market was heating up and getting 20% return in a year, when average growth is about 6 to 7%, we pulled out of the Perth market, I'd say about a year ago. So what's our current area that we're looking at for our clients, if our clients are open to that, is actually Melbourne and Victoria. So if we look at Melbourne and Victoria, Melbourne has a population very similar to Sydney, and some experts say it's actually greater than Sydney's population. So it is Australia's major city, just like Sydney. But property prices in Melbourne have had significant negative growth, and in fact, units, especially apartments, have gone backwards. Now that's an area that we want to be paying attention to. Just like I mentioned, Western Sydney, Southwestern Sydney, areas in Brisbane and then Perth, and now we're looking at Melbourne. So not only do we have prices in Melbourne going backwards, the state of the economy has been managed very poorly over a number of years, possible talk of a bailout from the federal government. And then Melbourne at the moment and Victoria is continuously taxing its residents and investors, etc., making the situation worse. To me, that is all about opportunity, because you want to get in at the right time. And it's not about getting out in terms of real estate, but it's about getting in and then riding the short flat line or maybe slight negative, and then you'll get an upward trend, and then you've got the long-term property gains also that's going to happen over a 10-year period. So recently, Melbourne or Victoria has been predominantly a Labor government situation that's been run by Labor. But recent elections have shown in by-elections that that process is actually maybe possibly changing. By-elections have shown that Liberals are getting into various council areas or local government areas of Victoria and Melbourne. And that shows that people of Melbourne are looking for a change. And when you see that change is about to happen, those are the markets you want to be going in. And so my take, if we look at the last 14 years, and thankfully, we've timed the markets correctly, and we encourage our clients or investors to hold for the long run, it'll be, my personal take is actually Melbourne, Victoria. There's no guarantees. However, history has shown that you want to be getting in where there's most negative talk, and as long as you can rent the property out and get a tenant in, I think you'd be a winner.